Have you ever struggled to create your very own trading strategy that works consistently week after week and month after month? If so, stick around. This video is for you. Hey everybody, Jimmy here. Welcome back to the channel. In today's video, I'm giving you 3 tips, my top 3 tips for developing your very own trading strategy. Many times you might find a trading strategy online, or maybe a friend recommends one, or maybe you pick one up in a chat room and you check it out and it might work a little bit, but then it ultimately fails. I've done this. I know how discouraging that can be. And so what I want to do for you is help you to understand that you can develop your own trading strategy built around you as an individual that meets your needs and fits into your life. So with that, let's get into tip number 1. So for tip number 1, you need to understand and explore your personality. That's right, your personality. Some of us are really patient. Some of us are not so patient. Some of us get angry easy. Some of us like to revenge trade when we take a loss. You need to figure out exactly who you are, and that can help you tailor your trades and your strategy so that you set yourself up for success. Now, one way you can do that is by taking a personality test. All right, so personality tests. Let's just go into Google. This is what you can do. It's really simple. You can just say personality tests online. And you can see in here, you'll get free personality tests, 14 free online personality tests. You could really pick any one you want, but basically what these are going to do is they're going to help you to understand who you are in terms of your patience, whether you're lacking patience or you have an ample amount of patience. It's going to talk about your personality that will give you more insight into the type of trading you want to do. And the reason this is important is because, for example, if you're not patient at all, then you're probably not going to sit through a 2-day trade that's maybe going against you but hasn't stopped you out yet, waiting for it to go back to the upside and make you profitable. You might not have the patience to hold on that long. So you might tend to gravitate towards scalping or shorter term plays, intraday plays. Now, if you are very patient, then day trading might be too intense. You might want to stretch things out and take a multi-day swing trade, multi-week swing trade, or even just maybe a few hours trade, maybe an intraday trade that's not on the 1-minute chart, but maybe on the 15-minute chart. So it's going to depend on your patience and what you're able to tolerate from the trade. Now, in addition to the personality test, another important point is to understand your time constraints. So if you only have 15 minutes in the morning to trade, then you might have to look into shorter term trading or be okay with being patient, taking a trade and letting it ride without you being able to check on it until the next day. So time constraints, whether that's family, work, whether that's exercise, whatever that is, chores you're doing around the house, you got to make sure that your trading style is going to be able to fit into your day-to-day. If your personality and your time commitments, you don't have those figured out, it's going to make trading very difficult for you. All right, here it is. Tip number 2, you want to make sure that you develop rules around your entry point for your strategy. What I mean by this is you need a set of rules, sort of an algorithmic approach to when you should enter a trade. So, for example, you might say to yourself, if a stock has 2 down days and then it shows a doji candle on the daily chart, then I take the entry the very next day at the open. That might be a trading strategy. And let me just show you in the charts real quick what I mean. Let's look at AMD on the 5-minute chart, and I'll just give you a quick example of a strategy that may have some rules around it. I think being in the charts will help you understand a little better. All right, so as far as the rules surrounding your trade, I just want to give you an example and show you a chart because I think it makes most sense to be able to look at a chart and say, okay, I understand what you're saying. Now, if you want to create some rules, let's just do it really quick. Now, I'm not saying follow this plan. This is what I'm making up just right now. But let's say you wanted to trade AMD for some reason and you were going to use the 5-minute chart. Some rules surrounding a trade might be, okay, I'm only going to take a trade, long or short, if a 5-minute candle closes above or below the 20 simple moving average. So on this chart, I have the 200 and I have the 20 simple moving average. Now, let's say AMD opens up today and pushes down. It crosses the 20 and it closed. So you might say, okay, the next candle, I'm going to go ahead and go short. So you go short at the open of this next candle, and then you'll have a trade management plan. We'll get to that in step 3. But for right now, that would be some rules. You could also say, I'm only going to take a candle that closes on a break of the 20 simple moving average if the volume is above 500,000 shares and it's a Tuesday. You can have any of these things, and this is where you have to really drill down into what you believe happens in the markets, or where do you see edge in the markets. If you go back and you're looking through price action and you say, hey, I noticed that every time we cross this level, we get a little bit of a move to that direction. You can create rules around that plan, around that idea, and then you're going to be able to go and test that to see if you truly have an edge in the markets. And finally, and probably the most important tip of all, number 3, you need to have a trading plan. You need to have a sound trading plan that you do not stray from. I have made this mistake, and I don't want you to make the same mistake. You need to know what your stop loss is. You need to know what your take profit is. You need to know how to figure out your appropriate size for shares. And most importantly, you need to know your R value, your risk unit. If you don't know what that is, I'm going to pop a video up right here that talks about risk units and risk values. Check that out, because that is super important and super critical to step number 3. So let's hop back in the chart for a quick example. All right, so having a trade management plan is probably the most important step, as I just mentioned. Once you're in a trade, you need to know what your take profit is, what your stop loss is. You needed to know all this before you entered the trade. If you are in a trade and you don't know what your take profit is and you don't know what your stop loss is, then your trade is wrong. You should not be in that trade. That is an absolute, it's got to be a hard rule for developing trade plans. You have to follow it because consistency is king. If you're always tweaking and changing a variable, you'll never know what's truly giving you an edge in the markets. It's very hard to find. You have to keep things simple and consistent. And the other thing is, when you're calculating your R level, your risk level, how much you're willing to lose on that trade, that's going to really help you understand how much size to take, how many shares to take, which is going to be related to and based upon your stop loss. Now, this is a whole other video. I did link above earlier that video that talks about how to size your shares appropriately, so definitely check that video out. And there might be another one coming soon where I might go deeper into that topic about using your stop loss to help calculate your share size. And so you don't miss that video, please hit that subscribe button and turn on your post notifications so that when I put that out, you'll have immediate access to it. So these 3 tips will get you started on creating a trading plan. And then from there, once you get these 3 steps in place, it doesn't mean jump into the live markets and start trading. Absolutely not. You're going to want to wait for my next video that's going to talk more about what to do after that. And what that's going to involve is back testing. Once you have all 3 of these tips in place, you then need to go back test this thing 50 to 100 times to make sure that it does in fact have an edge. And that'll just involve going back, setting up your rules, looking for an entry, and say you go back, let's do an example here. You go back a few days and you say, okay, we got a cross of the 20, a close, then what happened? You use your trade management, you use your entry rules, and you just go candle by candle to figure it out. And if it worked, you record it, you talk about how it worked, you just quick little entry into a spreadsheet about it. If it didn't work, you need to talk about why it didn't work. And then over these 50 to 100 trades, you can then calculate what your win percentage is. So I hope this video helped. Smash that subscribe button, hit the like button if you enjoyed the video, share this video with someone. Go ahead, it's fine. Your mom, your grandma, somebody might want to watch this. Share it out. And with that, I'll talk to you next time.